Nigeria's updated tax laws are set to impact employees and small business owners differently. For workers earning above 800,000 naira annually, changes in pay as you earn may alter their tax burden depending on salary thresholds, though low-income earners remain largely protected. Now, small and medium enterprises also face new obligations. Companies with annual turnover below 25 million naira are exempt from companies' income tax, while firms earning between 25 million naira and 100 million naira face a 20% rate. Now, businesses above 100 million naira turnover continue to pay about 30% of taxes. And for online store owners, they will be, of course, coughing out some certain amounts in exemptions and, of course, reduced rates, which may apply to a business of about 100 million naira yearly, offering some relief to smaller entrepreneurs. So to help us understand this better, I'm joined by Abiodun Kayode-Alli, who is an economist and a tax senior manager. Abiodun Kayode-Alli, thank you so much for joining us on the show. Can you please
thank you for having me, Nico.
Okay, yes, we can hear you now. Thank you. So first, let's evaluate the percentages from what you've seen so far and the records. What do you make of Nigeria's new tax laws and how citizens and, of course, businesses will be able to adapt to them?
Yeah, thank you. So I think the new tax laws, one thing is clear is that it tries as much as it can to provide reliefs and incentives for small businesses as well as medium-sized businesses. There are lots of reliefs and incentives for them. And even for companies as well, if they are incorporated as companies, there are lots of reliefs that are available. Okay? And that's on one hand. Then on the other hand, there are penalties for companies that don't comply in terms of registration and in terms of filing tax returns, either on a monthly basis or an annual basis. So on one hand, it's providing reliefs and incentives. Then on the other hand, it's also trying to ensure that there is maximum compliance by introducing penalties. So if you look at it in a nutshell, it's clear that the idea is to ensure and promote compliance one way or the other. So the idea is just to expand the current bracket of people who are paying taxes. That's one thing I see. With respect to the rates that you spoke about, for companies, small companies, right, looking at that threshold you've mentioned, if you achieve that threshold, you would not be paying income tax as a company, okay? That's for the companies. Then for the businesses as well, you've talked about the personal income tax. The personal income tax rate has been modified in such a way that there are reliefs for those who are low income earners. And I'll give you an instance. If you are earning somewhere within the range of ₦1 million in a year, right? And let me qualify it. The million naira I'm referring to is your annual income. If you are earning that, you won't even pay taxes at all, okay? If you are a minimum wage earner, you won't pay income tax. You won't pay income tax at all. Okay, and one thing we've seen, if I compare this new tax regime to the old tax regime, it simply means that it's more progressive. The new one is progressive, while the old one was regressive. Because under the old one, right from the points where you are earning 300,000 naira in a year, okay, where you are earning 300,000 naira in a year, you were required to pay taxes, okay? So that's one, these are some of the differences we've seen. Then it's all, the old one, I'm using the word old one, the existing one is regressive in a way that by the time you are earning 3.2 million naira and above, you would be taxed at a rate of 24% if you're earning 3.2 million naira and above. And Lincoln, you can just think about it. A lot of people are earning 3.2 million and above, right? A junior staff in a government parastatal, the clerics, right? If you think about even the traders, right? They do earn more than this, more than 3.2 million in a year. Most of them do earn more than 3.2 million in a year. The same rate that they will be taxed on is the same rate people who are earning 50 million in a year will be taxed on. People who are earning 100 million would have been taxed on. So that existing tax band was seen to be regressive, but this is now changing in such a way that by the time you are earning 50 million, above 50 million in a year, you will be taxed at 25%. Okay, so it's been designed in such a way that it's fairer, and more taxes are being paid by those who can afford to pay it. That's just a way I would like to start the discussion, Leko.
Okay, so while you were, giving your summation or your answers, one thing just keeps coming to my mind. How will Nigeria be able to rein in the number of taxpayers in Nigeria? Of course, a business ecosystem that's largely dominated by the informal sector.
Yes, and that's a very good point you've made there. So I'm sure you've seen in the news about the requirements for businesses and individuals to obtain a tax identification number. Okay, for you to carry out transactions, right? You need your tax identification number, banking transactions. So there is a provision in the tax law that currently requires banks to report to the tax authorities any new account that is being opened, then even existing accounts, transactions that are carried out by individuals, cumulative transactions of 25 million naira in a month for individuals and 100 million naira in a month for companies, right? So banks are expected to report this to the tax authorities. Then in addition to that, there are several loopholes that we have in the system, and I'll tell you two of them. The first one has to do with rent, right? If you look at landlords, right, some of the landlords or most of the landlords are probably not registered for the purposes of tax. There is a provision that says that you as an individual, by the time you are making a company is making your monthly pay as you earn remittance. By the time it's making that pay as you earn remittance, there is a relief called a rent relief allowance. It's a maximum of 500,000 naira. For you to qualify for that relief, you need to bring evidence of payment of your rent. So if you bring in that evidence of payment of your rent and you upload it to the tax portal, it's going to contain information of your landlord, right? So that's one way of bringing in landowners into the tax net. Then there's also another provision that penalizes any company that does business with a vendor that is not registered for tax purposes. So any company that is doing business with any registered vendor, that business will be required to pay 5 million naira. And you know that most of these businesses, they kind of rely on lots of vendors, and these vendors need them as well. There is that symbiotic relationship. So in order to ensure that they're able to continue to do business with these companies, they would be forced to register with the tax authorities and obtain that tax identification number. So from monitoring the transactions as well as the spending of individuals, you are one way or the other bringing these other actors into the tax net, Leko.
So I actually like the fact that there's a lot of information as regards these new tax laws that a lot of Nigerians are not privy to, and the fact that you are unpacking it is actually, doing justice to what Nigerians need to know about it. But I'd like to find out from your response, does it not mean that workers both in the formal and informal sector who do not earn above 800,000 naira are not subjected to any form of taxes, or there are still some pre-existing taxes that they are still obliged to honor?
Yeah, and thank you, Lekon. That's a fantastic question you've asked. So you are quite right. There are some taxes that still exist. So these new tax laws, they are dealing with certain taxes that are being administered at the federal level. But the thing is that there are some taxes that states and local governments can levy, and the powers to make these taxes and levies has been given to them by the Constitution, okay? So what's the committee responsible for coming out with these current tax laws that is going to become applicable 1st of January 2026, what they are also trying to do is to make recommendations to the federal government and the National Assembly on making amendments to the Constitution. So once they do that, you will then have a situation whereby the states would no longer be able to collect these taxes in such a way that we are truly addressing the problem of multiple taxation. And what are some of these taxes I'm referring to? Taxes such as the bicycle tax, such as the tenement rate, the levies, wheelbarrow levies, those sorts of things. They are all contained in a particular law called the Approved List of Taxes and Levies Act, right? Those ones are being imposed by the states and by the local government. So until the Constitution is amended, you would find a situation whereby those in the informal sector might still be encountering these taxes, right? But the other thing that can be done pending the time when that amendment is made to the Constitution is to get the buy-in of the states, right? Whereby the state is now committed to supporting the government in implementing these new tax laws and desisting from collecting those other taxes that these states and local governments have imposed.
Okay, so we understand that. So let's look at it from this other angle based on Phyllis so far. I mean, we're talking about companies, some other companies who earn below 25 and 100 million. They will be, exempt from some sort of taxes. They will have some sort of, recourse, 20% in 25% in some instances. But then, wouldn't the government be losing revenue? Because some people feel it's as though the government is trying to look good. But then when you look at it on the other end, the government might just be losing some funds that would or might be beneficial for its expenditure.
Yeah, Aliko, that's a great question you've asked. So the 25 million you made reference to is based on the current law. What the government wants to do is to take it a notch higher to 50 million. It exempts small companies who are earning a turnover of 50 million. That's what the current law seeks to do. But you are right. It does look like the government is giving out a lot to the extent whereby it might be exposed to lower collections. But the thing there is that Nigeria's problem was not even a problem of increasing the taxes. That was never the problem, increasing the taxes. The problem was getting a lot of people to actually pay taxes, because we've found ourselves in a system, thanks to technology, whereby it's very easy for people to actually make money without having a physical structure. You can be in your room and be earning millions of naira, and the tax authorities have no information about you. And also, we've seen situations whereby people in high places, they spend a lot of money. You see them on social media spending a lot of money, and by the time you look at their tax remittances, it's very small, negligible, or even nothing. And if you can address that problem of getting these individuals to now begin to comply, you'll see that it offsets most of the incentives that has been given to those existing ones. And that's why we've seen a situation over time where compliant taxpayers have always complained that they are paying their own fair share of taxes. They are doing the right thing. And it always seems like they are always the one that bear the brunt anytime the tax authorities are looking for who to pay taxes. So if I give you an instance of other territories, South Africa, for instance, right, the United Kingdom or the United States of America, South Africa, let's stay with South Africa because it's in Africa, right? A country like South Africa, they earn a huge chunk of the taxes from personal income tax, and that personal income tax is paid by the extremely wealthy individuals in that country. And we're looking at the people in the range of that make up 4% of their population. Those are the people responsible for paying a huge chunk of the taxes they collected. But that's not the case in Nigeria. So as long as we can address these things, we will discover that there is actually much more that could have been collected than we're actually collecting currently. So what the government is also trying to do, which with respect to lowering this tax rate is to incentivize most small businesses and ensure that they are able to become bigger. And by the time they become bigger, they will then pay the taxes that we have at the tax rates that we have currently. Okay, so that's what the government is trying to do. Get as much people who are not paying to begin to pay, and incentivize the smaller ones to become bigger, employ people, and then begin to pay. And if Nigeria is able to get it right from an implementation perspective, as well as from a reporting and technology standpoint, I think Nigeria will be able to collect better, more efficiently, and you discover that the government is not losing in any way.
And just as you said, you talked about the digitization of the process. I mean, we know that online store owners and digital entrepreneurs are equally growing rapidly in Nigeria. But then from what you've seen in terms of infrastructure and the willpower, do you think that Nigeria has that cutting-edge technology to drive or optimize this system digitally? Because it's not enough to say that, oh, okay, with the employment of technology, we are going to do this. But then it's the ability to apply those digital systems to achieve the intended purpose. Do you think Nigeria is there?
Yeah, that's a fantastic question. So I think personally that Nigeria is getting there. I would say we're there, but I think we're getting there. And so what the tax authorities are currently trying to do, because there is a provision in the law that requires companies to onboard themselves on the tax authority e-invoicing platform, right? So I would say that the current tax authorities are even focusing on large businesses right now, focusing on onboarding large businesses that are making turnover of 5 billion, right? That's their focus right now. Once they're able to successfully do that with large businesses, then they can then come in to begin to support the smaller businesses in doing that. But over time, one thing I would say is that our tax authorities in Nigeria, they've actually been making strides in terms of advancement of the use of technology. Because I remember back in 2017, 2018, when it comes to filing tax returns, we used to do this thing manually. You would see printing lots of documents, lots of papers, and taking it to the tax authorities to file your tax returns. But over time, the tax authorities began to develop that specialty and skills, and they created their own tax platform. And this has now been upgraded over time. Given the fact that we now have a Nigeria Revenue Service, and that Nigeria Revenue Service is now providing support to the state internal revenue services at the subnational level, right? We believe that over time, Nigeria can actually get there. But at the moment, I'll just say it's a work in progress, Lekon.
Okay, all right, so I understand your standpoint. Yes, it's a work in progress, but then we still need to talk about the issue of compliance, most especially among small businesses, largely the informal sector. What do you think that operators across board should be doing to ensure uniformity and compliance so that everyone, both governments, the businesses, the regulators, everyone is on board and the process is seamless?
Yeah, and that's a very good point you've raised, right? So the first thing that we need to establish is even correct information and awareness, right? We've seen lots of information going out in the public that is not totally true, right? So the first and most important thing we need to do is to get it right in terms of information. In addition to that, I know the financial institutions are working hand in hand with the tax authorities to begin to notify taxpayers of some of the obligations that they have, right? We've seen in the news where the tax authorities themselves have come out to grant interviews to explain how these things would work beginning from 1st of January 2026. The only thing I would say is that much more needs to be done with respect to this, right? We need to see much more awareness. And there is a particular office that will be created, referred to as the Office of the Ombudsman. there needs to be so much enlightenment with respect to this. And also it boils down on individuals, taxpayers themselves, businesses themselves, to begin to ask questions, send questions to different alternative channels that the tax authorities have in place, WhatsApp, emails, right, and phone numbers. There is a need to begin to call to get this kind of information on what you need to put in place in terms of compliance. So I think a lot more needs to be done from the tax authorities side, and the taxpayers themselves need to do their own bit in terms of getting correct information. So I think once that information is in circulation, I think to a large extent you see a situation whereby there will be increased compliance. But one thing I would expect in terms of the technology is that more room should be given to small businesses to comply. 1st of January is not far from now, right? It's just 3 months down the line. Yeah. Would that be sufficient enough to accommodate most of these businesses to come on board this program, especially from a technology standpoint? So I think a lot more needs to be done from the tax authority side in enlightening these businesses and preparing them, showing them, organizing sessions, organizing stakeholder meetings, right? Town hall meetings. I think a lot more needs to be done from tax authorities from that regards.
Of course, we understand that education is key, and of course, knowledge is power. That can actually drive this conversation and make it seamless by the time it's set into motion. Abiodun Kayode-Alli, an economist and tax senior manager, thank you so much for sharing your profound knowledge with us on the show.
Thank you for having me, Leko.